Welcome back. Now let's take a look at how the markets are faring, and it certainly has been a mixed week really for this week, as markets perhaps vacillated and tried to take in as much information as they possibly could. And we're also then trying to weigh up the fears then of a second wave of the coronavirus and more cases, particularly out in China as well as the United States, and perhaps a quick recovery coming through from the economies much the same as the world's number 1, 2 and 3 economies. Then Japan, of course, suffering as well with their core consumer price inflation number coming in at a negative 0.2% for the month of May. So bit of a mixed picture when it comes to the bourse and how it's set for most of the morning. But by close of trade, Asian counters managed to close in the green then, or in the black, shall we say, as well. 0.75% higher there for the Hang Seng, with around 1% higher for the Shanghai Composite out in China. A good day as well for the Nikkei in Japan, 0.5% better off there. Yesterday, the US markets not necessarily doing too well, although there were gains for the Dow Jones, for the Nasdaq, should I say, and the S&P 500. Just nominal gains on that front, as that market perhaps tried to get a gist of where things lie with regards to more cases and the rise and the betterment of that US economy. In Europe today, we're seeing a much better picture. A lot of selling off has happened quite prodigiously this week as well, but more than 1% gains across the board then for most of the FTSE, the DAX and the CAC 40 out in France, as markets do better. Local front as well, also some positivity filtering through. 1.1% gain for the JSE All Share, 54,532 points at present in this afternoon trade. Almost 2% gained for the banking counters, so certainly doing well on that front. While the gold index has gone up more than 3%, so perhaps investors getting back into the metal itself and those companies as well. So a good number there, with resources climbing around 1%. Speaking of resources, well, gold has certainly gone up around 0.5% today. It's at $1,730 a fine ounce, 0.5% better off, with platinum counters following that move as well, $809 a fine ounce, with Brent crude also almost 2% better off today. So perhaps concerns having been around supply of Brent crude not necessarily staying in the market right now, as some of the other allies to OPEC have said that they will maintain their price cuts beyond, or supply cuts should I say, beyond the month of July, which means that less oil will be in the market as well beyond the month of July, which certainly does help in terms of supply. If there's less supply and more demand, then ultimately the price goes higher, which is what we're seeing right now. On the currency front, it's a slightly better picture than 0.4% better off for the local index against the US dollar, 17.38 there. Some positivity perhaps returning back into the market ever so slightly, even though all the economic indicators are certainly pointing to some negativity. The finance minister, Tito Mboweni, yesterday even noting, of course, that South Africa may have to go back to the International Monetary Fund in 4 years' time if we don't incur a better or a massive change as well to our budgetary system as well, and just how South Africa spends its money. So that could certainly hurt. At the same time, we got word, of course, then from the Reserve Bank Governor, Lesetja Kganyago, even saying then that South Africa may even get a bankrupt reserve bank if we were to engage in quantitative easing or the introduction of new money into South Africa's system, whether that be in the form of buying new bonds or just printing new money anyway. So the Reserve Bank Governor making clear where he stands on the matter of increasing how much money is in South Africa's system. So it gets very interesting from this point on. Next week, Wednesday, of course, we expect the finance minister to deliver his supplementary budget, or what he would like to note as a zero-based budget, sooner rather than later, in order to help South Africa deal with every cent that is being spent in its fiscus. Let's unpack this picture just a little bit more now. Warwick Lucas joins us as well via Skype. He is from Galileo Capital. Warwick, thank you so much for the time. It certainly has been an interesting one when it comes to the market front. We're up today, but certainly has been a mixed picture this week, trying to weigh up the more cases as well as a revival in the economy. You reckon a V-shape is still definitely on the cards, or perhaps a little less so now?
Hi, good afternoon there, Billy. I'm sorry I lost the last portion of your question there, I'm afraid.
No worries. I just wanted to find out what you think of the global recovery, whether that V-shape is still a prospect at all then for the global economy.
Look, I think that as long as economies continue to have relatively dovish central banks, the most important thing is the restoration of confidence. The faster that confidence can be restored, the better the general recovery is likely to be. So it's really very important that countries generally behave in market-friendly and production-friendly fashions toward their major producers and businesses. And confidence is, of course, the cheapest form of stimulus that you can get.
Yeah, and look, it certainly gets a bit worrying when you have FDI into South Africa dropping off quite significantly, about 15% in fact, for last year then, according to the United Nations. All right, well, you speak of, commodities as well, which have certainly been of great interest and newsworthy really over the last few months or so. The oil price picking up again today, OPEC and its allies now finally getting to some sort of resolution. I worry that OPEC has seemingly not gotten its story straight. One day it looks like they're cooperating with each other, and then the next day they're still fighting it out, seeing who's got the bigger, if you want to call it, sentiment on strength.
Okay, so I mean, a lot of the OPEC members live from hand to mouth on their oil receipts. So even though the price is currently poor, it's worth more for them to sell product than it is for them to leave it in the ground. I think in terms of the general outlook for the oil market, the International Energy Association is looking at a market that's generally coming back into balance. I think, though, we can certainly see, apart from the cuts by OPEC members, there's also been a savage cut in production in the US market. So, for example, if I look at US liquid natural gas exports, they are down more than 60%, and the number of operating US rigs is even lower than the commodity bear market of 2016, and possibly 80% off its peak. So we are also seeing a market that has that's experiencing severe production pressure on US producers. In total, the IEA was looking at around about 8 million barrels per day coming off the market, which is a contraction of around about 7 to 8% as compared to a second half comparable to a year ago. So it's in balance. Prices are poor. Whether there's scope for much upside, I doubt.
What happens then with regards to Sasol then? I mean, the job cuts are obviously happening on that front, and they're trying to find a way to diversify away from oil, but it's still a big portion of their business. Absolutely. Look, one of the benefits of the diversification of Sasol, depending on how you look at it, is the chemicals business, which has always been there to basically benefit when the oil prices, i.e. a major input cost for Sasol's chemical businesses, is weak. So in theory, that should make the portfolio more resilient through the cycle. The problem, of course, is being loaded up with debt. They are not resilient at all. And I think the fact that they're in the position they are now speaks to stewardship on the company having been possibly a little poor for some time. They are very unspecific as to where the headcount cuts are going to happen. The unions have already spoken about it, but it looks to me as if a proportion of those are going to go right through the management chain, so even up into senior management, which of course
tend not to be unionized, and therefore notice is not necessarily required. Could this company even be looking at its own version of zero-based budgeting? Quite possibly. It certainly seems as if there's some quite urgent overhaul work required here, and not just on operating plant.
Yeah. All right. Warwick, we'll have to leave it there. Thank you so much for the time. Really appreciate it. Warwick Lucas is from Galileo Capital. They're helping us unpack that
Pleasure.
market picture this Friday afternoon. Have a wonderful weekend.